Looking at what opportunities we have here going into our afternoon and then into the rest of this week. The first thing to do is to just review where we've come from here. We came out of our lows, which were a profit target, now going into 5 weeks ago. And we had this very first pullback after a trend break. And the target was from the 65.03 to the 67.2475s. We went to and through that profit target on April 7th. And that turned us into extension long levels. Those extension long levels, drawn from the previous highs of the traditional to highs, traded as we were coming into April 12th. And those targets were from the 67.75s to the 69.4325s. You can see that we hit those profit targets and then we went through them. That started a new extension. That new extension long level was the most aggressively front run of extensions that we've had up until that point. The support level was actually down here at the 7,036.75. The failure of the trend was down here at the 7,001. And for about 2.5 weeks here, we chopped around in this big bull flag. And then we finally lifted off and completed profit targets here as we were going into the beginning of May. Again, going to and through profit targets to start extensions. And that's where we are right now. We completed not only the negative 23% target, but also the negative 61.8. And we've been trailing a series of smaller setups up here as we've gone on into the week. Remember that we had been inside of a halfway back long from last week, Thursday's lows to highs on Monday. And for the most part, we have literally gone straight up from those levels. Now you'll notice here, the smaller time frames still have an extension long level that we ran into yesterday morning and completed targets in. Now there was a new highs to highs extension in the smaller time frames. That level broke. We made a little double top up here as we were going into the beginning of the daily doldrums. And then the question is that smaller time frame a valid extension? And this is where we have to be very, very cautious, because when you get to a negative 61.8% line like this, it is very rare that even extensions will make it past those negative 61.8s. And so our bullish above line in the sand is that larger setup from the previous highs that we have back on April 15th to our highs. And so this is the larger extension. Those 72.98s are also the previous highs that we had had on Friday. You can see that a little bit better here. Let me get rid of this other extension, get it off the screen here. But you can see where we came from, and there's a previous high from Friday that would be sitting right on top of. Let's also look at that in relation to our gap fills. And we're going to go down to a 15-minute time frame here. And you can see that we had two pro gap up and go situations here. And those unfilled gaps are such a long ways away here. This is Monday's previous 4 o'clock close. This is Tuesday's previous 4 o'clock close. And then as you can see here, could we fall all the way back down into that support? We certainly could. Are there other variations of support? There could be in the smaller time frames. When we were going into the beginning of the daily doldrums, we hadn't traded support yet. You could make a case that that smaller time frame had traded a 38.2% line, but we ran back up into a halfway back short from highs after that smaller extension failed. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.